Welcome to a new video on my channel. Hope you're doing fine. If you like a company in the EV space that is posting record revenue and also a lot of growth, then this video might be interesting to you, because in this video I want to give you an update about the second quarter of 2023 results for Chargepoint. Here you can see an overview about the topics I want to cover in the video. But before I start, yes, you heard correctly, Q2 2023 earnings. This is because the company has a fiscal year which is ending on January 31st, which then leads to these quarters as you can see over here. And the second quarter of 2023 begins in May and ends at the end of July. And therefore, this is something to keep in mind, and this is a little bit confusing in the beginning. As I mentioned in the introduction, the company posted a record Q2, which leads to a revenue of around 108 million in comparison to almost 82 million in the first quarter of 2023. The revenue consists of around 84 million of revenue for network charging systems and almost 20 million for subscription and a little bit less than 4 million of other revenues. In total, this led to a net loss of around 93 million US dollars. More loss than the loss of around 85 million in the first quarter of 2023. The company also reaffirmed the guidance, which is between 450 million and 500 million of revenue for the fiscal year 2023, and a gross margin, between 20% and 26%. Also, they guide for the operating expenses, which should be between 350 million and 370 million. Now let's have a look at an overview about the revenue and the distribution in a larger scale, beginning at the fourth quarter of 2022. As you can see over here in blue, the network charging system revenue has been increasing almost every quarter, with a few exceptions, which have been the first quarter of 2021, as well as the first quarter of 2022. And something to highlight, the first quarter of 2023 saw an increase. However, this increase was really small. As you can see over here, almost 400,000 more, which is still a lot better than the loss which they had in the first quarters of 2021 and 2022. The same is also true for the subscriptions. They almost go in tandem. However, the increase has been on the percentage basis higher from Q4 2022 to Q1 2023. The other revenue, I'm excluding because they are fluctuating and also a small part of the whole revenue. Now you see also an overview about the recent quarters. And if you have a look at the total revenue in yellow over here, you see that this revenue is rising really nicely, almost as a trend line. As you can see over here, the only exception is the first quarter of 2023. But overall, it looks really nice. However, as I mentioned before, there has been a decrease for the first quarter of 2022 and only a slight increase in the first quarter of 2023. And the highest quarter-over-quarter revenue growth was around 40%. So something to keep in mind for later on when I talk about the guidance and how realistic I think this guidance is. Now I added also the operating expenditures and as well the net loss. As you can see over here, the operating expenditures has been increasing. However, only slightly after the third quarter of 2022, or maybe the fourth quarter of 2022. The increase was not as high as before. However, it's still growing, and you can see over here the net loss has been decreasing beginning of the second quarter of 2022 until the fourth quarter of 2022, and afterwards it has been rising again. rising pretty dramatically from Q4 2022 to Q1 2023, whereas the difference between Q2 2023 and Q1 was only slightly. So this is a positive sign that there's a decrease in net loss, which is decelerating, even though it's still higher than the quarter before. Since they also guide to gross margin, this is an overview about the development of the gross margin as percent. As you can see over here, it's been pretty low for the first half of 2023. However, it's increasing from Q2 to Q1. And the range is between 17 and 27% of gross margin. So now let's have a look at the guidance in detail. As you can see over here, I mapped out the pathway for the company, and then I give my estimate about the guidance and if I think this is realistic. As you can see over here, they on the one hand guide for the third quarter of 2023, whereas they only guide for a revenue between 125 to 135 million, which would mean between 16 and 25% quarter-over-quarter growth. Yep, so they had a revenue of 190 million in the first half of 2023, which means between 260 and 310 million of revenue is left to achieve the guidance, which would mean consecutive 13 to 27% quarter-over-quarter revenue growth is needed to achieve these goals. And as I mentioned before, the revenue growth has been within this range, and they also guide for this range. So I think the company is most likely to achieve the lower range, at least in my opinion. And if they can produce results as they produced before, then they might even achieve the higher range or even exceed their expectation for the revenue. Not really sure though about the exceedance, but yeah, as I mentioned before, the quarter-over-quarter growth was higher than 30% for this quarter. So if they can pull this out, then they might even achieve something which is higher than they initially guided for. On the other side, if I have a look at the operating expenditures, they had 210 million of operating expenditures in the first half of 2023, and with their guidance they have only between 140 and 160 million left, which I think is not realistic because this would be between 12 and 70% less than in the first half of 2023. And I don't really see this happening with inflation and also with the supply chain issues. I think this is something which in my opinion is not realistic, but yeah, would be nice if the company surprises me. And I also think the same is true for the gross margin. This is more fluctuating and therefore they might be able to do this, but I don't really care that much in this stage of the company about the gross margin. For me, it's important that the revenue is growing and then that they're in line with their projection, or almost at least pretty close, so that we can see there's a path to profitability, and this is something to be seen. What I also focus on in companies in this early stage is the cash at hand and the cash equivalent, which we have right now. As you can see here, this is fluctuating and I'm really surprised to see this. Not really sure what happened. I mean, the first spike is clear because it went public, but afterwards it went down and went up again. So something, I want to have, or I should dig into it later on. If you have any opinion about this or news, please let me know in the comments. As you can see over here, right now they have around 470 million, which is almost a little bit more than 5 quarters of cash left. So they will be having no problems in the next 5 quarters with the current cash burn. So something to keep in mind. If the cash burn has been will be increasing, then this will last less than the 5 quarter. However, it's been decreasing, then it might last longer. And they also said in the initial investor presentation, the cash at hand they have with the transaction will be enough for them to be, or until they are cash flow positive. Not really sure if it's still the case, but we will have a look at this later on. The shares outstanding, it's also interesting to see how it's developing. There's been a lot of dilution in the beginning, especially end of 2021 and the beginning of 2022. Later on, the dilution has been lower, especially in the fiscal year 2023. There's been, almost, let's say, 1% of dilution. This is a good sign that they are diluting the shareholders less than before. Unfortunately, there's a data point missing because I couldn't find any details about the shares outstanding for the end of fiscal year 2022. As you can see over here in green, the green line is the change, QOQ, and the bars are the total amount of stock-based compensation in million US dollars. There's been a peak for the second quarter, on the one hand for 2022 as well as for 2023 of around 25 million US dollar, and also the revenue, the stock-based compensation numbers between Q3 and Q1 of 2023 have been stable for around 50 million US dollars, whereas it decreased year over year around 100% for these numbers. But it would be interesting to see what the future looks like if there's only the spike in Q2 of every year, and otherwise it's around 50 million. However, it's still something to keep in mind, especially because it's 70 million for the last 4 quarters. So this is almost 70% of the revenue which you put in. So this is quite significant, and but it's a problem for a lot of these high-growing early-stage companies. Now let's switch again to the broader picture. As you can see over here, the Opex Development, and this is for the different fiscal years and what they projected. So for fiscal year 2021, they had almost 10% more operating expenditure as initially projected. However, the percentage of the operating expenditures in comparison to the revenue has been in line with the expectation. You can also, however, see that there's a huge gap between their expected percentage of the OPEX of around 97% to the actual number of more than 130%. You can see here, this is 70% negative surprise, unfortunately, in this case. And I'm afraid this will continue in the future, but this is something to be seen, just something to have an eye on. And since they also guide for the gross margin, you can see the same effect over here. The gross profit is lower than initially projected. The same comes true for the gross margin, and the gross margin is also decreasing instead of an increasing of the gross margin as initially projected. So now to finish off the overview and the guidance, as you can see over here, for the first 2 fiscal years as a public company, they exceeded the revenue projections they initially had, quite significant. As you can see over here, also the year-over-year growth is higher than projected, which is definitely a good sign. So they are really performing well on the operating side, at least what output is going. As you can see over here, the gross profit has been in line for fiscal year 2021 and lower than expected for 2022. And the same is also true for the gross margin, total operating expenditures, as well as percent operating expenditures of revenue. And then logically also for the results from operation. So they are lower than initially projected, or worse than initially projected. Let's have a look at the guidance. And over here you can also see it's still the same as with the last 2 fiscal years. the guidance for the revenue is higher than initially projected, and the margin as well as the operating expenditures is worse than initially projected. So unfortunately, this is still the case, and to sum everything up, I think it has been a mixed quarter. Even though they have been delivering on the revenue, there are still a few parts which I'm negative or maybe skeptical about. First hand, what about supply chains? Are there any part shortages? I didn't have time to have a look at the conference call, but I will hopefully be able to do this shortly. And yeah, if there are any negative effects on the revenue, because this is where they are really shining, the company right now. What about the development of the operating expenditures? Can they really decrease it as initially planned? And if so, this would be really a good sign. If they won't be able, then unfortunately, I think this will lead to further dilution in the future, which will lead me to the second part, or the next part. If they won't be able to limit the net loss, then they will have to raise cash until they are, or before they are, positive free cash flow. And this is definitely a bad sign for the investors. And also what is really interesting is the inflation and the impact on the margins, because as I mentioned before, they guide for this, and this might negatively impact the stock price in case they won't achieve their guidance. And as I mentioned before, I'm not really concerned about the margins right now. This would be really, this will get interesting, in my opinion, in a few years, but not right now. And I think the most important part is the revenue, which they're really delivering on. But yeah, would be interesting to see and hear what you think about the company. And if you really like this video, which I hope, then you might also enjoy having a look at the video I show you over here, as well as the playlist for the different revenues of these big companies. And until next time, have a good day. Bye bye.